Yeah. I just want to have a quick look at where we started stock trading for you.com. Okay, good. Right. Here we are. Come. So yes, so we sold. Yeah, we sold at the support of the market at 14,805.
Mm-hmm.
But I think it took me in at 14,800, which I'm sort of suspecting might have done the same with people. So we did the same thing. Okay, fine. Okay, let's go back to your question. So, always remember the name of the game is to make money. Yeah, you're right, because if you look at the 1-year daily chart, the market is uptrending, yeah?
Mm-hmm.
But obviously that is a huge bearish candlestick. That's a huge bearish candlestick. Although, let's follow the market again. If in doubt, you always follow the market slowly. So, you can see it made a low there, then it made a high. Then it came back there, made a new low. And it's gone up, made a high. Then it came down, made a new low, making higher highs so far. Then it's gone up, made a new high there. Then it's come down, it's broken that low. It's formed a new low. It's gone up, it didn't break that high, came back down, made a new low. At that point, you begin to worry that, is this uptrend about to turn? Because it's now making lower lows and lower highs, but it's still above the moving average 50. So that's where, decision making comes in. Is this market downtrending? But again, this is where the trend is your friend, always sometimes helps you out. That's the overriding factor. Because the mere fact that the market is still above the moving average 50, you still regard, okay, you'll still be reluctant to sell till it breaks it. So it's gone back up, but then it made a new high here. So we've now got a new high there. And then it's come down, it's made a new low, which is higher than the previous one. Good so far. It's gone up, made a new high. Then it's come down there, made a low. Then it's gone up. It's got a high there. And it's come down here, it's made a low. So far, so good. Then it's, obviously it's raced up, made a high there. So now it's flying down. Yep.
Mm-hmm.
So the big question is it going to take out, one, this low point here? You can actually mark it as a reference point.
Yeah, put that there, yeah.
So if it takes out that one, the low there is 14,713. Let me just write it down actually. 14,7. The low there is 14,9. What am I saying? Let me get my head straight. The low there is 14,493. So 14,493. 14,493. So that's the low there. Now, if it gets there and it stops, plus or minus 2 points from that point, then you can say maybe it's from the support there, and it could start going back up. Or if it doesn't get there at all and starts going back up, then that might just have been a huge pullback in the market. Yep.
Mm-hmm.
Obviously, if it takes that bit out, and the next point you're now looking at the moving average 50. If it now takes out the moving average 52, then the likelihood is then falling. Obviously, from a swing trading point of view, you can actually just sell just below the, put an order there straight away to sell just below the pivot point, the moving average 50, or at the pivot, sorry, it's late, I'm mixing up my words. You either sell from a swing trading point of view, there's a 1 year daily chart, so you either sell from a swing trading point of view just below the moving average 50 or the Fibonacci retracement, the 23.6. Okay, now the key here is you've now seen the big picture, yeah? Are you following me, Kemi?
Yeah, definitely.
Okay, you've now seen the big picture of the market and we followed it carefully. So we now know it's made a high there. There's the most recent low is here. In fact, sometimes you can, if you want to be finicky, you can say it made a low there if you want to be finicky, yeah?
Mm-hmm. Yeah.
So, it's taking that one out. It's completely taking that one out, fine. So we can ignore that one. It's taking that one out. Then it's come down. It's now approaching this second one. If it gets here, comes to a screeching halt and starts to go back up. Still remember, the market is still above the moving average 50. So for all intents and purposes, it can still turn and go back up.
Yeah.
If it takes this one out, you start to get really suspicious. So if it takes out this low, you start to get suspicious. By the time it starts getting close to the moving average 50, then your idea is that the market is on the way down. And obviously, the sheer length of this red bar shows you there's a huge selling pressure in the market. And it doesn't bode well for the market. The fact this has happened after the interest rate decision was announced. And I will show you something else too. Actually, I'll show you now. Let me show you now. Because sometimes I do that too. If you go to Market Watch, because sometimes when a huge fall like that happens, I like to find out, what's going on.
Well, I thought it was because of the Portugal announcement, because I think I checked, and I think that was on the news at the same time, wasn't it? I might be wrong.
Yeah, in fact, I'm going to bring that up for two reasons. One is just to show that as a day trader, the news doesn't mean anything to you. Because what we are looking at is after we've already made our money. So that's one thing I wanted to highlight. Because sometimes that's a mistake most people make. They're trying to trade the market by market and analyzing the report. Because you can imagine if you had waited to analyze the report, decided what you want to do, looking at what people are saying, people will be saying all sorts of things. By the time you make up your mind, the market has left you behind. So like we all did today, we already planned our trades. That's why I love technical analysis, especially with day trading, because you planned your trades, you've executed your trade, the market fell, you're already in your live trade. So it's just now you're going to find, okay, what happened? But the key is that you're already in the trade, don't forget. So it could be anything really. So, okay, but yes, that's the main thing. And the other thing, yes, I was just looking here in Market Watch. They were just saying here about the US dollar rose by the most since January against euro. Obviously, remember, currencies are traded in pairs, euro, US dollar. So the euro is a fixed figure of 1. So if the dollar goes up in value, obviously the euro will fall. Okay, so anyway, so like it says, the US dollar rose by the most since January after European Central Bank President Jean-Claude Trichet omitted the kind of comments that traders were expecting to indicate another rate hike forthcoming for the Eurozone. So that, like I say, it is what he has not said that is most important, with no signal that the ECB has changed its hawkish tone. Anyway, blah, 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 blah. Like I say, all this is just people's opinion after the fact. But anyway, it sometimes helps to know what's going on. Now, if you now take all that into consideration, again, remembering the market will do, I mean, I've soon realized to ignore all these analysts, because it's very easy to make comments after the fact. Anyone in hindsight can say, oh, this happened because of this and that. So I never just trust what they say. Yes, it's good to read the understanding, and it's good to get other people's opinion, but don't take it as gospel truth. Because if the market decides to go up 200 points tomorrow, it will. Nothing is stopping it doing that. Okay, but going back to that. So if you now look at the overall picture, which way can the market go?
Up, down, or sideways?
Ah, well done. Well done. Well done. Well done. And I'll just highlight that to everybody because I think that's very important. I always tell people, keep your trading simple. If you make it complex, you will get yourself into trouble. The market can only go 3 ways. Regardless of what's happening, regardless of the report, whatever anyone says, the market can either go up, down, or sideways. There is no other direction the market can go. And I always say keep it that simple for trading. If the market is going up, you want to buy. If it's going down, you want to sell. If it's going sideways, you want to keep out of the market. And it's as simple as that. If the market is going up, you then say, okay, which indicators? Kemi Prince says, well done. He's calling you a mega trader. Okay. He says, so if the market is going up, you just say to yourself, okay, which indicators am I using to catch the market going up to buy? If the market is going down, you'd okay, so what's my strategy or which indicators do I use to sell? Going sideways, you keep out. So it's that simple. So well done to me. So like you said, the market can either keep going down, yep. It can start to go sideways. But obviously, it's still above the moving average 50, so it can still go up. So it comes back to your question. So if it goes up, and don't forget, although you started it with a day trade, if it goes up, there's a likelihood you could just wipe out your profits. So you then have to decide now, okay, how much do I want to keep in case it goes straight back up? I mean, again, don't be greedy. I mean, let me show you. I mean, exactly what I did. I just kept 100 points. No, I lie. I think I must have kept more than that because I know the market can just turn around and just go back up. So you can see I sold at 14800. Yep. And my stop is 14685. So that's 100 and how much?
Almost 200. Oh, yeah, that 170 something, I think. I'm not an accountant.
Yeah, so about £100 plus. So I'm happy now that if the market takes off tomorrow and comes up, then yes, I'll still bank my £115 or 115 points, sorry. So this is where you just decide now how much you want to lock in.
Because a part of me was thinking that, obviously because I was following the moving average 50, so obviously this was a day trade, so looking at the 2-day 5 minutes, I was actually going to place a buy order, you know, following the moving average 50. So if that was the case, my stop would be at the moving average 50. So if it, you know, took me out, it would take me out there, and then I'd start with my buy order.
Actually, you could do what I'm doing, actually, because I've got 1.5 contracts here. You can see I've got half a contract here and 1 contract here. So basically, I've got 1.5 contracts, which total about, you know, almost 600 points. Yep.
Yeah.
But you can see here I've got a buy order, which I'm moving with the moving average 50.
Okay,
but it's just for half a contract.
Yeah.
So if it takes this buy order and it keeps going up, fine. But if it takes me out, I'll only lose 20 points with half a contract.
Yeah.
But I've got
I
that
only
room.
use the contract anyway now.
Yeah. But so yeah, you could do that.
Just a quick question then, Remy. So
Yeah.
you wouldn't, because that's what I've always done actually, which is if you're following the moving average 50, so yes, I would have placed a buy order exactly where you've placed yours, but my stop for the current trade would have been at the moving average 50 as well.
Yeah, you can do that. Again, that's what I said. There's no hard and fast rule. I think the key I always tell people is that the bottom line is that whatever you plan, you want to be comfortable and you don't want to be kicking yourself. So, for instance, if, like say I'm happy with 115 points here, so if the market comes back and takes me out, I would have lost out on potentially another 100 points here. Yep.
Mm-hmm.
If that happens to you and you're going to kick yourself, then you better move your stop with the moving average 50. So that is the bottom line. You see what I mean?
Yeah, no, I do.
Because again, I always say you can't trade in hindsight because anything can happen. I mean, let me go back to what I was actually showing you that you could also do, because if you go back to that previous low point, which we're keeping an eye on, and this is what I actually do myself, that was 14493. 14493. So I go to my day trading chart and I'll put a line there. 14493. 14493. So I'll now make, you can write a text on it. This icon here is a text message. So you click on that, you click here. So I can put here previous low on the 1 year daily chart. Actually, I can make it, let's make it bolder. Make it bold. Where's the bold? Bold. There we go. Make it bigger. 16. There we go. Okay. So I can also put that there so that it's another marker.
Yes. Yeah. I've already put that line actually on mine. I was actually waiting to see if it would cross actually.
Exactly. So for me, if this crosses it,
yeah,
I might then bring my stops closer or even still a bit 100 points away from that. And maybe just follow it down. But again, all these things is just decision making. But I think the key is just to make sure you do what you're happy with and not kick yourself afterwards.
Yeah, because even when the market was going down, what I was trying to do was like look at the previous high, whether or not it then broke the previous high or the previous low, when I was trying to work out whether or not I should just let it run.
Yeah, but I think you always have to remember that the key is that you don't forget you're already in a live trade and you're already in an extremely profitable trade. So I think the key is for you to decide how much you're happy to keep and how much you're happy to let go. Because again, don't forget the market could turn tomorrow and go up 300 points.
Yeah.
So again, don't forget that. So you always have to look at both angles. So if you say to yourself, you saw 100 points there, you didn't take it. You know what they say, the bet in hand?
Sorry, no, I've never heard that saying.
Oh, a bet in hand. Oh, they say a bet in hand is what two in the bush. It's a saying, the common saying that, it's better to be satisfied with the bird you have in your hand than to let that bird go to chase two birds in the bush that you might never catch.
True.
So again, that's what I always say with trading, you're your own boss. So don't, either which way, don't cost me.
No,
because I could tell you now, leave it, let it run, and it turns up and takes you out, and you say, oh, I should have taken my money. Or you move it, it takes you out, and then keeps falling.
No.
But again, I say, you can't trade in hindsight.
Yeah, I think for me,
what you're happy with.
I think I was just trying to work out whether or not there was a proper strategy to use. I mean, to be honest, I'm not necessarily that bothered because obviously it's all IG indexes money anyway. I've removed all of mine, so
Exactly.
yeah.
So yeah. Oh, there's a message from Prince. Sorry, everyone. I'm going to recap on what we've done so far. I'll just finish this comment from Chris, and I will round up the day. Prince, can you hear me, Kemi?
Yeah.
Yeah, it's a message from Prince. It says, Kemi, follow your trading plan. I tried to be sophisticated yesterday and lost out because the market came back up and took me out without any profit. So I mean, actually, that's a very good point, Prince, and that's what I was trying to say, is that you really have to be careful that, you know, the market could just turn around and you have to be happy what you're happy to lose out on.
Yeah.
Because as you can see, the market is totally crazy.
Yeah.
You can do.
I suppose my response to Prince would be, I should have a trading plan. But I haven't got one, so I can't actually follow it. So.
Okay, Kerry. So thanks a lot, Kerry. Well, that's a good point to raise for everybody, anyway.
Okay, thank you. Really appreciate that. Cheers.
All right then. Okay, so let's recap on our day and highlight the important points to take home, and then we'll take some questions and then finish for the day. Okay, as usual, we started with the economic calendar. We know that we're trying to see if there are any reports of high importance due out. We knew the European Central Bank interest rate decision was due to be announced at 12:45. We know that the market tends to trend sideways prior to reports of high importance. So with that in mind, if you're a very cautious trader, you can keep completely out of the market and just wait till then. But I tend to place one trade prior to the report coming out. So with that in mind, we went to the markets, and where was I? Okay, yes. I think this morning we noticed that the market had formed, let me make it, let's go this way. The market, the charts are all spread out because obviously the market has fallen a lot, so it's all compressed. Okay, so this morning when we met, the market, we noticed the market was going sideways, and we established that the market had formed a high there. The high there was 14,899, which we rounded up to 14,900. So 14,900, if I remember rightly. No, sorry, I'm going the wrong way. It was that. Let me go back to the fluff. Let me go back to Forex blog, see what we did this morning. Thank God for the blog. Here we are. Okay, here we are. So we've got it here. So this is where we are this morning. The European Central Bank was due to be announced. The market was trending sideways. So at that time, we put a pending buy order just above the resistance of the market at 14876. So 14876, 14876. Ah, there we are. Okay, so yes, that's it. So that's what we did this morning. The market was going up, and then also we noticed the market also had a support. So we put a pending sell order just below the support of the market at 14805. 14805. Okay. So that's what we did this morning. Because the market was trending sideways, we found that the market had formed a resistance at that point. and we found it formed a support at that point. So we said we'll place a pending sell order just below the support of the market and a pending buy order just above the resistance of the market. So in the morning, the market took the buy order, which kicked in a 20-point stop loss of 14,856. And our first target is 30 points away, which is 14,906. 14,906. So that's our first target, because if we know if the market moves halfway towards our target, we're going to move our stop to the opening level. So the market took our order, got close to the halfway point, but didn't get there, came back down to around the opening level, went up again, didn't quite get to our halfway point, came back out and took us out of the trade. So we lost out on that trade. So we lost 20 points, and as part of the plan, we just stopped trading till the report came out at 12:45. So we met again at 12:40. So we met at 12:40, and at 12:40, you know, the moving average 50 was above the pivot point, so we couldn't use that to buy. So we said the best place to buy will be just above the first resistance at 14,923. Or just above the moving average 50 itself, and just keep following it. And then because the support of the market hadn't been broken yet, we then said we'll use the support of the market to sell. So our pending buy order was just above the moving average 50, and then our pending sell order was just below the support of the market at 14,805. So that's what we planned to do at 12:40 when we met. And the report came out at 12:45. Not much happened initially, and then all of a sudden, boom, the market fell, and we made our 60 points in 5 minutes. So the market just fell, and we made our 60 points in 5 minutes. So we lost out on our first trade, losing 10 pounds, and made 60 points on our second and final trade, making 30 pounds. So we made a net profit of 20 pounds. So we'll just update the spreadsheet. We're now up to 160 pounds. But again, the key is that it was a good trading day because I stuck to the trading plan. Again, you make a comment there that the market was trending sideways prior. Market was trending sideways prior to the report of high importance. Okay, so that's the key. Again, it's always make sure you make objective comments at the end of the trading day, because as I'll show you, I mean, tomorrow we're going to round up the whole 2 weeks, but I'll probably start rounding up from tonight and tomorrow morning, because usually Friday night most people might not turn up. But yes, I think you can already see that we're down to the last day of our 2 weeks trading session, but you can see that despite all the comings and goings of the market and all that stuff that's been happening in the market, the only thing that stayed constant was the trading plan. We had days where we lost money, we had days where we made money, but we didn't change the plan. And I think this is what I always like to highlight during this 2 weeks trading session. Because, you know, if you keep changing your plan, because yes, on Tuesday we had 3 consecutive losses. But that didn't stop, it didn't make us change our plan the next day, which was yesterday where we made a profitable trade. Same with, last week we had a day where we had 2 consecutive losses. So it doesn't make us change our plan because we have losses. And that's the key. And that's why I say you should always have a habit of judging your trading day by the fact of whether you stuck to the trading plan. If you stick to the plan, you're a good trader and you eventually make a lot of money. If you keep messing around with your plan, you keep chopping and changing, you're going to run into trouble, you're going to lose money if you apply poor money management. But we've been profitable so far because we have stuck to the plan. And we started with £100, we now have £160. But even if we only had £100 and we didn't make any money, well, at least you can see already that with discipline, good money management, it's very difficult for you to blow your account in one day. If you blow your account in one day, then it means you've been applying poor money management and poor discipline. Because, again, you can see over the 2 weeks, with the plan we've been using, not only do we not blow our account, because the first goal of money management is long-term survival. And then the second goal is steady growth of profits. And then the third and final goal is, high profits. So our first goal, which is the most important goal, is what we've achieved, which is long-term survival. Because we were able to start last week with £100, and it's with this same £100 we've been trading with coming to the end of the second week. So for 2 weeks we've been using the same £100 to trade. That's long-term survival. Steady growth of profit, we've been using our 50p per point. We haven't been greedy, we've been steady, so it's just been going steadily. No panic. We started, went to 130, 160, then went down to 140, 140, then 140 went down to 110. That can make you panic and start changing your plan, but we stuck to the guns. It went to 140 and now 160. So again, it's just highlighting, and this is why this is the difficult thing about trading. And again, that's the importance of this 2-week session. It's just to highlight to you the importance of sticking with your plan. Because, one can show you how to trade in one day, but if unfortunately that day happens to be a good day, you now think that happens every day. And you then not realize that, yeah, you are going to have some bad days where you're going to lose money. But that's fine. Just stick to the plan. Because you can see, reflecting now over 2 weeks, because some people ask me now, when people start arguing about things about trading, and you wonder that your argument has to be based on objective things. Because some people tell me that, oh, 20 points is too small, I don't like 20 points, it keeps taking me out. Now, you've all been trading with my trading plan for 2 weeks. Have you found 20 points to be too small? And I'm sure most of you have to say you found the 20 points to be sufficient. But people will start arguing when you start discussing with people with trading. They will start saying all sorts of things. You have to find out, look, are they being objective? Now you can now reflect back on these 2 weeks using the plan we've been. So can you say that the 20 points was insufficient? No, you can't, because it's worked for us so far. It has limited our losses. Can you say 60 points was a difficult target to get? No, we've been able to achieve the 60 points easily. Can you say the pivot points strategy is not a good strategy? Have you seen the importance of reports of high importance and how it can impact on your trading, public holidays? So this is how you make objective decisions, not emotional decisions when it comes to trading. I mean, if you now just reflect on the 2 weeks so far, we can see here, public holiday, market was trending sideways. You can see here, market trended prior to the report of a high importance. So on this occasion, it trended. So let's count it. So on one day, it trended before the report of high importance. This here, it trended sideways prior to the report of high importance. So that's 1 each. Next day, it trended sideways prior to the report of high importance. So that's 2 to 1. Here, it trended sideways of the public holiday and report of high importance, so that's 3 to 1. Here again, it trended sideways, due to the public holiday. Yesterday, you can see the market trended prior to report of high importance, so that's 3-2 now. And then today, it trended sideways prior to report of high importance, so that's 4-2. So you can see on 4 days, so out of the 6 days that reports of high importance came out, 4 out of the 6, the market trended sideways prior to the report coming out. Now, 2 out of the 6 days, the market trended prior to the report coming out. So again, this is how you make objective decisions with your trading. Now, you can see it's plain and clear to everyone. So this is not an emotional decision. This is not someone being trying to manipulate the market. You can see clearly that 4 out of 6 times the market trended sideways prior to reports of high importance. So that means more often than not, the market will trend sideways before a report of high importance. Only 2 out of the 6 times it did trend before the report of high importance. So again, this is why this is reflected on my own trading plan. So that's why I only trade once prior to the report of high importance in case of that small chance it will trend before the report comes out. But I know that more often than not, it trends sideways before the report comes out. That's why I don't do it more than once, and I don't trade more than once before the report comes out. But I make these decisions based on all these observations and all these objective assessments of what I've been doing. So my trading plan didn't just come up by guesswork, or it didn't just come up because I felt like it. The trading plan I've given you as a base to start with has come from, years of experience, years of reflection on the market, trying this, trying that, until I got it right. So now, I don't need to listen to anyone telling me, oh, I should increase my stop losses because that's what they do. If that's fine for you and it works for you, that's fine. But I have a plan that I've tested, I know it works well for me. Again, I always say if you speak to 1 million traders, you will get 1 million different trading plans. No plan is better than the next. The plan that works for you and gives you a 40% success rate is a good plan. Stick to it. If the plan does not work, it doesn't give you a 40% success rate, then yes, you can change it. And even if you're going to change it, make sure, one, is not you not sticking to the plan, because 90% of the time the problem is not the plan, it's the trader. So 90% of the time is the trader not sticking to the plan. And if you're being honest with yourself and policing yourself well and monitoring yourself, then you can tell if it's you not sticking to the plan. So if you end up, say for instance, over the 2 weeks, you only stuck to your trading plan once, because you've been making a good, honest record of your trading, and you say, oh, today was a bad day, I did not stick to my plan, I did not stick to my plan, I did not stick to my plan. And you're being honest, and obviously you have to be honest, because again, like I say, as a trader, you are your own boss. I'm not going to come and scold you, I'm not going to come and look over your shoulder. You just have to you have to police yourself. So if you're right for the next 2 weeks, you didn't stick to the plan, you didn't stick to the plan, you didn't stick to the plan, you can't then go back and say the plan does not work, because you didn't stick to it. So you can't say it's the plan that was the problem, it was you that's the problem. So all these things are very important in being a successful trader. And you can see even before we do the last day of trading tomorrow, that the key is sticking to the plan. And again, you can see the emotions going up and down. Today you lose money, you get upset. Tomorrow you make money, you get happy. You lose money 3 times in a row, you freeze, fear comes in, or you're now scared to take the next trade. Like I kept telling you over and over the 2 weeks, plan your trade, plan it well, go with your plan, pull the trigger. Don't think twice. And that's how we've been successful trading together so far. Because as you've seen, I don't see any opportunities and say, oh, we're not going to take it, or we're scared. you know, we took the opportunity to buy above the resistance of the market. Yeah, it didn't work, and we lost. You know, like I said, no trading plan works all the time. But I didn't say, oh, because we lost money buying at the resistance, I will not sell at the support. You know, if the opportunity comes, anytime I see a resistance in the market and the conditions are right, I will use it. If I see the support, the conditions are right, I will use it. I use the pivot points, conditions are right, I will use it. Moving average 50, the conditions are right, I will use it. I won't think twice. You know, I know they're not going to work all the time. I know sometimes I will use them and I will lose money. But that won't stop me using them. I won't think twice before using them, and I'll apply good money management. Okay, I think that's enough lecture for one night. Any questions? If you have any questions, you can either click the hand button or send the question to question. But hi, Prince, you've got your hand up.
Yes, I do. I was going to just buttress that fact that you were mentioning to Kemi, of course, which you have repeated again in the course of this recap, about having a trading plan and sticking to the trading plan and being very, very aware of money management. Like I said, if you don't mind, just to show you a picture of my aborted trade. Well,
Yeah.
not aborted. The one that I took yesterday afternoon, which we all, well, I don't know how many other people took it, following the moving average.
Do you have the trade on your chart, on your screen?
Yeah, it's on my screen.
Okay, let us look at your screen, because I think I first have to thank you, Prince, for sharing, because I think I always say, you know, it's always good to learn from other people's mistakes, because I mean, that's the way I learned. Unfortunately, was from my own expensive mistakes, and I'm hoping everyone will learn from my mistakes. But I think sharing your trading experiences and sharing it is very helpful. So thanks, Prince. I'm going to pass the control over to you.
Okay.
So we can see your screen and you can show us what you're talking about. So you will see a sign saying show your screen. So just say yes to show your screen. Have you seen the sign?
To my right or where?
It should be on your screen somewhere saying I should click it to show your screen.
Okay, yeah, it's just come up now.
Yeah.
Okay. Can you see it?
Not yet.
Okay.
Have you clicked it to show your screen?
Yeah, I've clicked show your screen.
Oh, we still can't see it.
Wow.
Oh, that's interesting. Okay, let's quickly try it again. I'll take the control back, and then I'll give it back to you again, and we'll see. And if it doesn't work, we'll try and maybe use my own chart.
Yeah.
Okay, so let's try it again. So you see that sign saying show your screen.
Okay.
Have you seen it?
Doesn't come up.
Doesn't like your computer. You can't see it.
No.
It's okay. We'll use mine.
Yeah, no, you say I'm no longer a presenter.
Something wrong.
Ademola was made the presenter. You are no longer the presenter. Okay, show my now. Okay, the show my screen.
Yeah, we've seen it now. We can see your screen now.
Okay.
Okay, brilliant. Okay, so talk us through it.
Okay. At this point, I think about 3 o'clock, we were following the moving average.
Yes.
Yeah. So I took the trade at 14890 when the moving average was there. Well, I said, whatever, it will come to this point, which is the
Pivot point.
Is it pivot? Okay, pivot point.
Yeah.
Now, at about 5:30, it was just like 0.01 to hit 14826.
Yeah.
I said, this is my plan. until it has come a bit down to hit my point, my target. I wasn't going to close it. Then it went all up, came back down, still continued like that.
Yeah.
But somewhere along the line, I had moved this limit further down.
Okay.
Further down.
Yeah.
Now, the ironic thing is it got to 14807 when I checked later. And, you know, came down there twice. But because I had moved my stop further down, my limit further down, I was not able to get anything.
Yeah.
So it went all back up. Early in the morning, I checked. It was like, I said, wow, having a trading plan, sticking to your trading plan will make you money.
Yes.
And of course, it eventually took me out at nil profit.
Yes.
But there was, I then decided that today must not be the same thing.
Yes,
I must make, I go on FTSE.
Yeah.
I'm showing you my FTSE record for today. FTSE in the morning, FTSE in the afternoon.
Oh, it's blank. We can't see it. Your card is not responding.
Oh, okay. Wow. Anyway. So, having a trading plan and sticking to it has been ringing like a bell in my head.
Yeah. So you made your 60 points today on the euro US dollar.
60 points in the morning, 60 points in the afternoon.
Good. So you banked your profit today.
I had to bank my profit. So Kemi, if you are listening.
Thanks, Prince. Thanks for that. I'll just take the control bar, but that's very, very, very helpful. I think Kemi has a response. I can see her hand up. Hello, Kemi.
Hi. I just really wanted to clarify 2 points, really. I do have a trading plan, but mine isn't a trading plan that I've written down, but I do have a trading plan. But the second point really that I wanted to ask was when you're following the moving average 50, which I am, when would I come out of it? Because it's not my intention to stay up all night. So I just wanted to know, do you leave it, or do you wait till 12, or?
Oh, okay, good question. Actually it's 9:20. So actually I'm going to stop. Because I always say between 9 and 12, don't bother. It's going to start going sideways between 9 and 12. So I will just not bother. And obviously, the moving average is called moving average because it's going to keep moving. Between 9 p.m. and midnight, there's no point trading. And then obviously, I'm not going to be up all night trading because I have to be up early for work tomorrow. So again, at midnight, I will just use the pivot points because obviously you don't want to be up all night editing your stop with the moving average 50. So between now and midnight, there's no point you trading. So don't bother using the moving average 50. 9 to midnight, the market is just you can see now it's beginning to peter out. Can't you see? It's getting smaller and smaller. So there's just no activity between 9 p.m. and midnight. So no point even bothering to follow the moving average. From midnight, you can, but then again, you have to be up all night following it. So yes, you have to take all that into consideration. So 9 to midnight, no point trading. From midnight, you can start trading. If you're up all night and you can't sleep, you're an insomniac, then you can be using it. But obviously, if you need to get some rest, then it's best to stick to those fixed points in the market, being the pivot points.
Yeah, no, that's cool.
Okay. Any other questions before we call it an evening? I think we've had a good session this night. But I think we'll highlight all these things again tomorrow for the last time. But this is not the last time. We're going to have this every 2 months, and we'll have the Tuesday. Sorry, I'm in Nigeria next week, so unfortunately there won't be a webinar next week. I was going to try and do one from Lagos, but with the electricity problems, I don't want to chance it. So we'll probably do 2 webinars the following week. Although I'll be in Ghana then, but you know, Ghana is more reliable, and I think I did a webinar from the last time I was in Ghana. So we'll do it the following week. We'll probably have 2 sessions the following week, but there'll be no webinar next week because I don't want to chance electricity and all that in Lagos trying to do the webinar. But I'll say, yeah, we'll be doing this every 2 weeks. Don't forget the forum. You can still use the forum. You know, obviously the blogs are there if you want to recap on all the trades we've been doing over the 2 weeks. The blogs, the pictures, and the plan are all there on the blog, on the YouTube channel. Don't forget to register for the forum.